Breaking below the $70 level could be a major problem for silver bulls. They even mentioned the 200-day EMA as the next support, possibly as low as $50. Silver will average $81 per ounce in 2026. The Silver Institute projects a deficit of 67 million ounces in 2026. Silver just crashed below $68, and almost nobody's telling you the real reason why. Today, March 23rd, 2026, silver is trading around $67 per ounce. That is a drop of more than 7% in just days, a metal that hit $85 just weeks ago. A metal that exploded over 130% in 2025, and now it feels like the floor is collapsing. So I'm asking you right now, is this the bottom? Or are we heading towards something even more shocking? Stay with me, because what I'm about to show you is something the big banks do not want you to figure out yet. Let me give you the real picture. On March 18th, 2026, the US Federal Reserve made its decision. Interest rates stay unchanged at 3.5% to 3.75%. And they signaled only one possible rate cut for all of 2026. That single announcement sent shockwaves through precious metals. Silver took the hardest hit. Why? Because silver is not just a safe haven metal like gold. It is also an industrial metal. So when interest rates stay high, two things happen at once. Investors run to bonds for guaranteed returns, and industrial demand starts looking shaky. Silver gets hit from both sides. That is why this correction feels so violent. On top of that, the US dollar got stronger this week. A strong dollar makes silver more expensive for buyers in other countries. Less demand means lower prices. Technical analysts at Daily Forex are now warning breaking below the $70 level could be a major problem for silver bulls. They even mentioned the 200-day EMA as the next support, possibly as low as $50. Yes, I said $50. That sounds terrifying. But wait, because the story does not end there. Not even close. Step 1. Understand where silver came from. Silver was at just $29 per ounce in early 2025. By January 2026, it hit $80 to $85 per ounce. That is a rise of over 150% in less than a year. After a rally like that, corrections are completely normal, even healthy. This is not a collapse, this is a shakeout. Step 2. Check the hidden support levels. Analysts at Sunday Guardian Live confirmed this week silver is stabilizing near recent lows around $60-$70. They also note if the dollar keeps strengthening, silver could test $65. That $65 zone is critical. It is where significant buyer interest tends to appear. Watch that level closely. Step 3. Do not panic sell physical silver at these prices. I'm telling you, selling physical silver during a correction is one of the biggest mistakes beginners make. You lock in a loss and you exit right before the recovery. Step 4. If you're buying, do it in stages. Buy a small portion now, buy another portion if it drops to $63 or $60. This is called dollar cost averaging. It protects you in case the fall continues, and it positions you perfectly for the recovery. Step 5. Where to buy safely. For physical silver, look for reputable dealers with transparent premiums. Compare spot price versus dealer price. A premium of 5% to 12% over spot is normal. More than 20% is a red flag. For ETFs, iShares Silver Trust, SLV, and Aberdeen Physical Silver Shares, SIVR, are well-known options. ETFs give you silver exposure without storage headaches. For beginners, ETFs first, physical later, when you understand the market. Step 6. Common errors to avoid. Do not buy silver jewelry as investment. Jeweler markup destroys your return. Do not store large amounts of physical silver at home without proper insurance. Do not invest money you cannot afford to leave for at least 12 to 24 months. Now listen closely, because this is where the story gets very interesting. JP Morgan, one of the most powerful banks on earth, has officially published this forecast. Silver will average $81 per ounce in 2026. That is not a peak. That is an average, which means prices above $81 are part of that calculation. That forecast comes directly from JP Morgan Global Research. Now, let us look at other banks. Bank of America raised its 2026 silver outlook to $65 per ounce as a base target. UBS raised its forecast and expects silver to reach $60 per ounce, noting a spike to $65 is possible. Wait, silver is already below those targets right now. Do you understand what that means? According to these major institutions, silver at $65-$67 is either AT or below their target price. That is unthinkable value for long-term investors. Now here is the structural data that makes this even clearer. The Silver Institute projects a deficit of 67 million ounces in 2026. That means the world will consume more silver than it produces for the 6th consecutive year. Aberdeen Investments confirms. Since 2016, silver demand has grown 17%, while supply has fallen by 8.8%. Solar panel demand alone grew 143% in that same period. This is not a bubble. This is a structural crisis in supply. Now I need to tell you something that almost nobody in mainstream media talks about. While retail investors panic sell silver at $65 to $67, what are the big institutions actually doing? Here is what is happening behind closed doors. In 2025, silver-backed ETF inflows increased by 40%. 40%. That is institutional money flowing into silver, not out of it. In the first half of 2025 alone, silver ETPs saw record inflows of 95 million ounces. US and European mints were struggling to keep up with demand for physical coins and bars. China tightened its silver export licenses starting January 2026. That is squeezing global physical supply further. London vaults saw severe depletion throughout 2025. Lease rates on silver spiked. India became the world's largest importer of refined silver, with imports of approximately $9.2 billion in 2025, a 44% increase over 2024, despite prices nearly tripling. They're buying more even as prices rise. Here is the brutal truth. When you see a sharp price drop like this one, it is often driven by speculative futures traders and large funds liquidating positions. It is not driven by the structural fundamentals of the market. The fundamentals say one thing clearly: silver is scarce. Demand from solar panels, electric vehicles, AI data centers, and semiconductors is exploding. Approximately 60% of all silver demand in 2025 came from industrial applications. Modern electric vehicles use 3 times more silver than conventional cars. The Silver Institute calls silver the next generation metal. And while you're panicking at $65, someone very large and very smart is quietly accumulating. So what should you actually do right now? Let me give you a clear and safe strategy. First, position size. Financial advisors typically recommend keeping no more than 10% to 15% of your portfolio in silver. Overall precious metals exposure should stay around 20% maximum. If you are a beginner, start with 5%. You can always add more as you learn. Second, physical versus ETF. If you are new to silver investing, start with ETFs. No storage costs, no insurance, no premium over spot, easy to buy and sell. Once you have more experience and capital, add physical silver for long-term wealth protection. Third, the hold versus buy decision right now. If you already hold silver, hold. Do not sell into fear. Your break-even improves with time as the structural fundamentals play out. If you have no silver yet, this correction is a gift. Buy in small stages. Watch the $63 to $65 zone as a key accumulation target. Fourth, time horizon. Silver is not a 1-month trade right now. Think 12 to 24 months minimum. JP Morgan's $81 average target for 2026 is still very much on the table. The structural deficit is real. The industrial demand is real. The supply problem is real. Fifth, protect yourself from volatility. Never put all your silver money in at once. Split it into 3 or 4 purchases over the coming weeks. That way, whether silver drops to $60 or rebounds to $75, you are positioned for the long term. Remember, patience in precious metals is your biggest advantage over institutional traders chasing short-term profits. If you made it this far, you are already smarter than 95% of silver investors, because you understand the real story behind today's price drop. Not the panic, not the noise, the fundamentals. Here's what I want you to do right now. Drop a comment below and write "informative video." That tells me you found this analysis useful, and it helps this video reach more people who need to hear this information. If you are not subscribed yet, hit that button right now, because the silver market is moving fast in 2026, and I'm going to be here covering every major move, every key level, every opportunity. You do not want to miss the next video. See you there.